Hello active traders, and welcome to TradeMastery.com, the channel that's dedicated to helping you become more successful as a trader and start turning things around. Now we have really good Q&A from our Trading Week Ahead episode broadcast May 13th, 2017. So stay tuned for Q&A coming right up. Alright, well hey, good morning and happy Saturday to all of you. I hope that this week finds you all doing well in your trades. And as our market continues to go sideways, what do we trade? It's gap continuations and the strongest breakouts with the strongest pre-existing uptrending charts that we can find. So right now is a great time to go ahead and ask me any questions. I like to put these in my video blog on my YouTube channel, but it's also good to get live real-time answers here for all of you. So if you would, go ahead and ask questions. Hey, how you doing, Peter and Mira and everybody? If you can hear and see me okay, do me a quick favor and tell me what country or what state or whatever location you're from. Where do we have traders in from? With so many of you here, we're up to just over 4,400 registered as of today. Another epic turnout. It's the place where all the smart traders hang out each Saturday. So it's a real pleasure to have so many of you here. You've got questions, I've got answers at the Ask Ken Calhoun show. Let's go ahead and get the party started. Let's see a question. Okay, from Jim is asking, how can I scan for breakouts faster? Great question. One of the things that I like to do in my own trades is look at leaderboard scans, like the NASDAQ and the New York Stock Exchange percent gainer list. You'll have a list of 10 to 20 instruments and scan through the ones that have the highest volume for new high price action breakouts. So that's the way that I look for alerts on behalf of my members in swing scans and trading open. So I look at percent gain list, and I also look at my own core portfolio list. The more experience you get as a trader, the more you realize it's important to have your own personal go-to list of instruments that you like to routinely trade, whether that's ETFs or stocks or whatever instrument category you like to personally trade. Have a watch list that is a regular part of your trading life that you then add to or subtract from based on current market volatility. So, good question. Hey, thanks everyone. Let's see a question here. Terry, hey Terry, when I'm in a trade, I don't know where to set my stops. Well, that's always a challenge, isn't it? That's half the trick. When you're looking at developing a good, smart, sensible trade setup, one of the things that really helps is when I'm looking at trading, whether it's a day trade or if I'm looking for a swing trade or an intraday trade, you know, something that's run up sharply, one of the best things you can do as a trader when it comes to setting your stops is make sure that you have a consistent rule or a consistent process that you use every single time you trade. Now, you're most objective about setting stops immediately after getting an order fill. So if I'm day trading and I say buy right over the whole number breakout at say 39.20, I'll put a stop at the 39 right after I get filled, right? So I'll use my 20 cents usually as my comfort zone for a day trade. So intraday trades 20 cents. I'm a huge fan of break-even stops though. In my live trading room I teach how to do that along with time and sales for professional tape reading. And when you're looking at really good charts that have good volatility, one of the things that really helps is make sure that you're reading the tape in real time and using the tape strength to help you set your entries and exits. So for stock day trading, really important to use time and sales along with the 1-minute candlestick chart. For stock and ETF swing trading, the thing that I will always do is use a loss of 2 days of support in a trade. So if you get into a position that breaks out, let's say we're looking at something that's trending up. Let's say I'm doing a bottom fish on Snap, okay? Snap's one that gapped out on Thursday and started to bounce. If I buy somewhere, say over 20.20, I'll use a loss of 2 days support, no more than 2 points, or a loss of 2 days of sequential support, whichever's closer. So that's a good, smart, intelligent way to keep focused. The biggest mistake that traders make is, drumroll please, trading without any stops, and that's likely to cost you a lot of money. So stop the madness. There's got to be a better way. As a professional trader, I'm always keen on minimizing my risk. The best professional traders I know, myself included, are always looking at, you gauge somebody's success potential by how small their stops are. You know, because all it takes is one big stop loss, as we all know from experience, to wipe out a lot of previous hard-earned, hard-won gains. Does this sound familiar? Are you with me? Do you agree with me or disagree with me on this? Let me know. If you get into a big stop loss, say to me anything over say $400 or $500 is a big stop loss, that could wipe out 4 or 5 small incremental gains that I've gotten in other stocks, and so it's very frustrating. So the best way to think about it is when in doubt, get out. And if you have a small stop loss strategy combined with the strongest charts, and you're going wide instead of deep, meaning throwing lots of darts at the market, you're much better positioned than throwing a Hail Mary pass at one big chart. So one big trade. Yeah, Frank's saying real men don't use stops. I'll say real broke men don't use stops. Bada bing. I'm on fire, so it's fun. It's real men don't use stops. Yeah, real broke men don't use stops. But professional traders, it's the size of your stops that gates your success as a trader, right? It's all about getting in on charts that are likely to be good rockstar continuation breakouts and putting a protective stop process underneath everything else. So that's important. One of the best things that I found, at least in my own life, for massive success, both personally and professionally, is to always test and always experiment. Don't overdo it. There's a point of diminishing returns, but have a good, solid, basic test strategy every single week in your trades. So you're trying out different time intervals, different magnitudes of stops, different sectors. You know, are you trading oil or gold or semiconductors or retailers? Retailers have been down in the dumps last week, eh? Things like I don't know, KSS. We're looking for shorts in this in the live room on Thursday. Retailers really took it in the shorts, right? Like Kohl's and what's another one? Nordstrom's, a customer service leader, but not a price action leader, because Nordstrom's really got slaughtered. Boom! Knock it out. Ching! All the way from 50 down to 41. So don't try and be a bounce trader. Don't be that guy, because the next thing you know, it's down and you're in deep kimchi and it's down in the muck and in trouble. So be a trend trader, either shorting in direction or going long in direction for charts that actually have a shot. So as we're looking for good plays, one of the things that I think can really help you in your own trades is start off by looking at sectors in addition to the broad market. Our S&P's been going sideways. Gold has been on the resurgence since Wednesday. We started to get some heat in the gold sector. This is the XAU, the Philly Gold and Silver Index. You can see it's got a nice three-day uptrend in a row. So we'll cover more on that in our official broadcast. Let's see. Question, I thought we started at 10. Yes, we do, but I'm always here early for you guys. The early bird gets the worm, and the early traders who are smart and showing up here early on time get bonus tips, just as my personal way of saying thanks to all of you for being here. And the punchline is, smart traders always ask questions and test and use really tight stops. So be a smart, intelligent, focused trader. Ask a couple of questions. Let's see, what else do we got here? From Bill, what's the best way to get, I have to squint, I'm sorry. I'm 53. The older I get, the tougher it is to see sometimes, even with 20/20 contacts. What's the best way to get started with your service? Well, either swing scans or trading the open. If you're a swing trader, go to swingscans.com. That'll forward over into my Trade Mastery site, or tradingtheopen.com, which will also now go into my Trade Mastery site and you can get more information. Sandra L., how can I get more consistent? Well, consistency comes from a process and making sure you've got a step-by-step strategy that makes sense. So you may have seen my flow charts out there. One of the things that I like to teach traders to do is have a step-by-step process that involves not only top-down market scanning and profile out your sectors for relative sector strength, but then drill down and identify the strongest gaps and the strongest breakouts, and have an entry, an exit, and a trade management strategy designed to get you in on the right trades the right way, on your terms, in a way that makes sense for you personally. So you're covering both the macro and the micro of your trades. Like I like to say, you're looking at both the big picture market. Right now the S&P is doing nothing, right? The S&P has been going sideways. If we look at our 90-day candlestick chart, you can see we've been in sideways congestion since February. The market's been going nowhere since February, since late February. So for that reason, it becomes even more important for your potential trading success for you to be much more selective and make sure that you are having a very well managed, very specific reason for a trade. And that does it for another episode. Remember, with our S&P going sideways, you have to really focus on the sectors like oil and gold that have been bouncing lately, or semiconductors that have been moving up in spite of the market's sideways drift. What are the gap and breakout charts that really make sense to trade? For help with those, you can go to swingscans.com and tradingtheopen.com, two of my sites for swing and day trading stock traders. So until next time, trade with passion, trade with tight stops, and try and make as much money as you can while keeping your stops as small as possible. Thank you so much for watching. Be sure to leave your comments and questions in the area below. Give this video a thumbs up if you like what you heard, and certainly feel free to subscribe. The YouTube channel is free. So until next time, best wishes for successful active trades.